Well, guys, it's, oh my gosh, the last video of the year. So first I'll start by saying Happy New Year. It's certainly interesting enough. And we'll just dive right in to what's going on in the gold and the silver markets. But I'm talking about, of course, the spot markets. So can we go to the split screen so they can see this chart? Okay, so I pulled this up. This is the volume on the options at the CME group. This first one is in gold, spot gold, the spot gold contract. So what you can see, it starts at 2018. That's the second half of this year, and we're not even done yet because this only runs through July. So you can see this huge spike in contracts that have been bought in, this is spot gold, and then this is spot silver, even more extreme, right? So why have we seen nonstop to valuation levels? Because the traders have been piling in here. So don't worry about the volatility, because with all of this piling in, and they've done this a number of times, but the CME has raised its margin requirements, which means that a lot of those contracts were done purely on debt, borrowing to buy those contracts. And if they raise the margin requirements, that means that more, you have to come up with, or the traders have to have more cash available, and that is supposed to slow it down. And they did that, and this is what happened in 2000 and actually, what am I talking about? Yeah, 2011, but also back in at the beginning of this trend in 1980. So the CME, kind of like the Federal Reserve, using interest rates to regulate the rate and speed of inflation, the CME is attempting to regulate the rate and speed of those contracts. CME on Friday evening, so this was last Friday evening when we saw spot silver actually go above 80 bucks an ounce. So both spot gold and spot silver making new all-time highs. So on Friday evening, they raised the margin to trade to $25,000 per contract, and that was effective yesterday on Monday. So that's an additional $5,000. So what that also means is that for those entities that are sitting in those contracts and wanted to maintain it, maybe they had to sell some of those contracts off. Wow, wasn't this a good time to take profits? So that's really what's been happening in these markets. Traders are booking profits because they're kind of anticipating that what happened back in 1980, what happened back in 2011 could happen again, which means that because of the requirement, the margin requirement, it pushed the spot contracts into that, remember that cup shape? So pushed the prices down. And then, of course, they went back up, concluding the cup. Now, it took a while. So is that going to happen again? Are we going to be looking at this long drought? No, we're not. Because this time actually happens to be different in that there is a shift that started about a year ago in January with the physical markets taking over for pricing and for price discovery. So this time actually is different because we are transitioning into a new system. What was happening in 1980? There was the kickoff to the pure debt-based system. What was happening in 2011? We were attempting to recover from the great financial crisis. So both of these things, the CME as well as the central banks, were tasked with controlling what the visible price of gold and silver were. Because as you should be able to see by now, a rising gold price is an indication of a failing currency. And with the devaluation trade, all the talk, that's really what we're looking at. But we can dig into this a little bit more. and I want to do that. Spot silver is on track for its best annual performance since 1951. And let me tell you, it isn't even marginally close to its fundamental value. But I want you to look at these extremes. This is as pertains to the gold contracts, and falls 5% yesterday as traders book profit after rally to record. It is the second time the metal has plunged that much this year. Here they are. I'm doing the circle there and the circle there. So it's easy to do in a paper market, right? Because it's just a contract. Quick and easy to buy, quick and easy to sell. Different kind of reaction in the physical metals markets that takes a minute because it's physical. It's not boop, boop, boop. This is real. That, my friends, is not real. But let's take a look at the spot gold contract, and you can see that even better. And remember, we talked about those 200-day moving averages? Even here's those two drops that I just showed you on the previous chart. But even with the yesterday's, and today it's up again, we'll talk more about that in a second. But even with that 5% correction, we're still over 20% away from that red line, that 200-day moving average. And remember, technically 10% is a lot. It doesn't mean anything, right? It can stay in a range here. It can go back up. Is it going to, what I really want you to understand is we're talking about easy to buy, sell, and manipulate contracts, unlike the physical. But I want to talk about silver as well, because I know that's where everybody is going anyway. And look at the range. That's what I'm trying to show you. That volatile range just yesterday on spot market. Going back to before 2020, there is nothing like that trading range. So it went up, it went above 80, and then it closed down at 72 and change. And you can see that ginormous range. Let's look at it a little bit more closely in the spot silver chart, because you can see, look at that huge run up in those contracts, right? And then what happened after that? Okay, so it closed at $72.15, which is still 71.6% above that 200-day moving average. Look, I know that it's always more fun when things go up, because psychologically you're going, isn't that great? But I frankly only really watch the spot charts because I know that you do, and I want to help you understand what you're really looking at, because I know it's fiction. Even at $80 an ounce, silver is severely undervalued. Even at $4,400 an ounce, gold is severely undervalued. And the markets, I mean, they're happy. You're not able to find one Wall Street analyst out there that isn't anticipating a banner, at least a kickoff, banner 2026 kickoff in the stock market. All of them, 100% of them. I don't know, that's a little daunting, but it's an anticipation of more of this. So is this really about any of these markets going up? Because quite frankly, while part of what's happening in silver and gold is also in anticipation of more AI energy facilities, of which they would need silver and copper and gold, some of that's probably baked in there too. Just keep in mind, nothing goes straight up, nothing goes straight down. It all bounces along the way. And I wanted to remind you of how this really works, because we're going to take a look at what happened during the 2008 financial crisis with spot gold, gold stocks, and the collectible gold coins. Okay, so this is the chart that I created way back then, and you can see that spot gold went down, Gold stocks went down. The physical markets, which are different than the paper markets. Now look, this stuff, just this raw piece of gold, is definitely impacted at this point by what happens in those spot markets. But this stuff, they went up and created a new high for this trend cycle in 2008. More than likely, and I don't have that data yet, but when I do, I'll show it to you. More than likely, we have concluded that cup, and now we're going to go to a breakout in this. More about that later as I have it and as I can show you. Because again, on the top, that's spot gold, and that went down. The middle are the gold stocks, and that also went down more than the spot market did, and the bottom is the collectibles. There is a finite amount of the physical. There is an infinite amount of the digital. Your choice. But the reality is if you don't hold it, you don't own it. Don't get blinded by Wall Street's lies. Just wherever you are inside of your cycle, keep accumulating. This is from this morning. Metals rebound after plunge from the records. And that happened to be, the time is on the end of that slide. But yes, remember, nothing goes straight up. Nothing goes straight down. You are always going to get bouncing along the way. And as long as you get higher and higher lows, and this is something Mimi has learned, and she's recognized it even in her work as we're tracking what's going on, not even with the markets. If you keep getting higher and higher lows, I guarantee you will get higher highs. And if you keep getting lower and lower highs, I can guarantee you will keep getting lower and lower lows. At the moment that I recorded this was earlier today. I don't know where it is right now because we've been working all morning, but spot gold happened to be up about 54 bucks almost at 43.8617. Spot silver was up $5.37 at that moment, 75.83. Oh, I think I got to sneeze. Nope, I guess I avoided the sneeze. And again, nothing goes straight up, nothing goes straight down, always bouncing along the way. Don't believe the Wall Street lies. Just keep accumulating. Be your own central bank, because the reality is if you don't hold it, you don't own it. And you're battling the Federal Reserve, and you're battling the CME and the LBMA and everything else. I'm perfectly comfortable sitting in my physical metals. I don't care. Plus, what else do I have? I have surety in food, water, energy, security, barterability, wealth preservation. I have a wealth of community. It's been so gratifying this year, as well as shelter. That's what we need to lead a reasonable standard of living. And so now I will take questions. And please, if you like this content, please hit like, make sure you subscribe, and truly share. That is really so important to do. And I'm going to start with Anna 2462-D8I. Hi, is U.S. pre-1933 certified territorial gold, such as gold jewelers produced as state fractional gold tokens, okay to purchase? Are they the same as regular pre-33 gold? Yes, they would be classified as a collectible and have that same status. And an easy way to check is just go into the IRS guidelines. If you can hold them inside of an IRA, then they're classified as monetary gold. If you cannot, that's the kind of gold that you want. And this was actually really exciting. So I'm hoping that this writer is listening, because this is from Instagram, and it's Maddie V. Maher, and it says, "Hi, Ms. Zang. My name is Madeline. I'm 14 years old, and I'm extremely interested in finance. I aspire to be extremely successful when I am older, and I know I am capable of achieving my dreams. You are absolutely capable of achieving your dreams. I just got goosebumps. I am always interested in speaking to people who have achieved my dreams and others with advice and knowledge that I would love to have. I also live in Arizona, relatively near you. If you have any advice or think you could or would like to help me in any way, I would be extremely grateful. Thank you very much. Any advice would be greatly appreciated. Thank you so much, Madeline. Don't lose that yet. Thank you so much, Madeline, for giving me that question, and I am so excited to talk to you. So I'm going to ask you to contact us, and who knows? I mean, part of my goal in future-proofing this company is in supporting new talent. And it's your generation that's going to be feeling the impact of whatever my generation has done and this new monetary system. So to have you interested in it and to have the ability to pass down my knowledge and to help you help your fellows would mean everything to me. So contact us, and I think is anybody going to try and reach out to her? I think we're going to try and reach out to you as well. But yes, definitely contact us, and let's see how I can help support you, and then you can help support the world. Dream big. Dream big. I mean, you kind of sound like me when I was your age. So yeah, I will do whatever I can to support your efforts. Absolutely. And to ensure, by the way, that you have sound money going into the future so that the playing field is leveled. That's what I want to see for all of our children. And Bob Asker 2537 asks, Lynette, silver to gold ratio is 56-1. Would you suggest converting some silver to gold or wait until silver slows from outperforming gold? Thank you for making finance understandable. Oh, thank you so much for that comment, since my goal is to make it understandable. Thank you so much. Yes, I think that what you should do is give us a call and let's see how much of each you have, what you're trying to accomplish. And then I think this is a great time to make that conversion. If it makes sense, it might not make sense. We don't want you to do anything that doesn't make sense and support your goals. So give us a call and talk to a strategy specialist, and you're going to define your goals and what you're trying to accomplish, and then they'll help you understand how much and what kind of silver do you need. Excuse me. How much and what kind of gold do you need? And it is my pleasure. And by the way, if I ever say something that you're not completely sure of what I mean, please let me know. That's my job, is to translate financial noise into understandable language so that you get to make educated choices that actually puts your best interest first, regardless of what anybody is saying. That's why I like to show you the charts and all of that too, to help you understand it. So thank you so much letting me know that I'm reaching my goal just like Madeline wants to reach hers. That's great. And Lacey Davis 4770 asks, why do the Asian markets keep pulling the price of gold and silver up and we pull it down? Well, because everywhere else in the world is more toward a physical gold and silver market. In the U.S., it's been more toward the paper or digital, the contracts that have been dictating the price. And since last January, the new trend that is evolving and unfolding are the physical markets that will be giving you good price discovery, because you don't get any good price discovery from Wall Street. That's all. Everything has been turned into a trade. You know, we think that it's supply and demand because we're told that it's supply and demand. No, no, no. It's traders that determining how much you pay for that apple or that gallon of gas or gold or silver or anything else. Why do we allow them to have that power? Let's take our power back. Together we can do that. So really, it's the transition that we're in, and that's why I keep tracking what's going on with it, because I will be very happy when we are inside of a true supply and demand market. Then you get good price discovery. And also, that's also when you would get gold and silver moving toward their fundamental value, although that really will come more with the overnight reset. And this just occurred to me, so I'm kind of diverged for just a second, because this is, yeah, even this one too. This is 2006. This is 1995. I don't know if you can see it or not. These are silver eagles, and they're tarnished. They have some tarnish on there. And a lot of people think that that matters. With the new stuff or with the old stuff, it doesn't matter at all. Don't clean your coins. Don't do it. Okay? So just a little aside, because I'm sitting there looking at it, and I see the big tarnish on there, which it's called toning. And I personally love it, but I'm just telling you, don't clean your coins. Okay. And there's Teresa Marie, 1089, asks, Lynette, I don't understand what glint is and what it means. Can you explain? Also, same for arbitrage. Thank you. I executed my strategy when you were with ITM and so happy with my results. I'm so glad you did. So glad you did. And you can call us because we are absolutely here to help you. But okay, glint is a credit card that has physical gold in your name, your gold in a vault. And you can use it for the first part of the strategy where you need liquidity. So it would work like this. First, you're going to use up this garbage, the cash, because it's most recognizable. But then the glint as a MasterCard would also be recognizable, and you could take it into the grocery store or any store and pay for your purchases. And then what they would do is sell off however much you spent in gold. They would sell that off for you. So it's your gold in your account, but it has a MasterCard on top of it that you can use, and therefore it makes gold more quickly liquid and easier to use in the normal marketplace. And arbitrage is where you see an opportunity to buy something at a cheaper price at the same time that somewhere else it's trading at a higher price. So you buy it at the lower price, you sell it at that higher price, and that's your arbitrage. And if that was not clear, let me know. I'll try again. And Curiosity Nudge asked, please describe again how to use silver instead of cash, like 1 ounce silver coins, and explain about gold and other metals. This is actually a piece that I am working on right now. So if you can have a little bit of patience, I'm not sure that will be out next week or after, and actually it depends on when it gets posted too. Yeah, Mimi said they're going. But Curiosity Nudge, that is already in the works. So, and I think it will be much easier for me to show you at the same time that I explain it. So if you can have a little bit of patience, and if you let us know, or if you're working with a strategy specialist at Zang Enterprises and you let them know when we're coming out with it, they will make you aware, and we'll get that done. And then they'd also be able to walk you through it which they can do with any of the pieces that I do. If you ever want to go through it more slowly and have your strategy specialist walk you through it, they have access to all of my work, all of it. And so we can make that happen too. And Casey Wood 1041 asks, Lynn, my mom calls me Lynn, but that's okay. If the COMEX can only settle in cash if they don't have the metal, does that mean that we're now subject to Shanghai? No, what that would be, if there is a demand for delivery of the metal itself and the COMEX is unable to do that, yes, what they've done in the past, they will declare what's called a force majeure, and they will pay you out in cash and probably pay you a premium because they don't want you to complain. But the Shanghai exchange is going more toward the physical. And what's really happening is the power is shifting from the COMEX dictating everything. Maybe, I don't know for sure that it'll be the Shanghai exchange, but it will be the physical markets that would dictate it, and Shanghai is more about the physical metals. So it's not that we would be more subject to the Shanghai exchange, it is that we will be more subject to true supply and demand statistics. And Ernest DeBella, God bless you and family. Thank you so much. And to everybody that's watching it and everybody that's not watching it too, frankly. In a video, you talked about 1/20th of an ounce of gold, that's this, to 1 ounce of silver ratio. And other talk about a range above 80 or below 60. 1 AU AG when making buying decisions. Can you talk about these ratios? Yes. So what this is this is a $1 gold coin. And that's why I say the ratio between gold to silver back in 1913 and earlier than that was a 1/20th of ounce of gold to 1 ounce of silver. Now, historically, and we got up, oh gosh, I don't know, as high as what, 110? That means the price of an ounce of silver was very low compared to an ounce of gold. Okay, so that's the ratio. How much is silver compared to how much is gold? That's the ratio. Historically, we have seen them go back to that standard ratio, or that original ratio, I should say, not necessarily standard. So that is a possibility that will happen again. And when you see silver outperforming gold like it has been doing recently, basically what's happening is that ratio between the price of silver on the bottom and the price of gold on the top is getting smaller and smaller. I will say, though, that in all of my studies on how gold and silver perform during hyperinflation, we will see that ratio like we are right now. We'll see that ratio narrow, but then once the hyperinflation becomes fully apparent, we will more than likely, if history repeats itself, see that ratio grow again. However, whether it's more narrow or wider, silver still maintains your ability to purchase the same goods and services. Gold expands your ability to purchase the same goods and services, and so there's more opportunity positioning. But right now, that's exactly what we are experiencing. Silver, in terms of prices, going up faster than gold. So while they're both going up, silver is going up faster, and that ratio is more narrow. I think someone said 59-1 or something like that. So that's the ratio. And will it get back to the 20-1? It could. I mean, historically, it has in the past, though not necessarily in a hyperinflationary environment, because in that environment, remember, gold is the primary currency metal, and this is what they reset the currencies against, is gold. So, And Lincoln 05H asks, with QE and Trump, do you expect inflation to exceed 10% in 2026? Yeah, I do. Now, do I expect them to report it over 10%? No, I do not, because they don't want you to understand what's really happening. And a lot of people have a tendency to deny their own experience, which is crazy to me, but they do. So, yeah, I definitely do. And in fact, I don't think it's gone much below 10%, even though they can report it at 2 3/4 or whatever, because what they constantly do is they change the accounting methodology, or they take things out. It's called hedonics as well. So like in the basket of food, maybe originally there was steak. When that got too expensive, they put in ground beef. When that got too expensive, they put in hot dogs. So we're not really seeing it, but John Williams from Shadow Stats that have been tracing that and was instrumental in establishing that index to begin with, he's been saying that it's been running above 10%, even regardless of what the manipulated and massaged numbers look like. So the answer is yes, I do think it will be well above 10% in 2026, though they may not report it at that level. And Organic Rebecca 2314 asks, pay off mortgage or buy silver? Well, for mortgage payoff, my personal preference is the slabbed gold, but in a very lower quality. But why not do both? Is it either or? Because you're going to be able to pay off your mortgage when they do that overnight revaluation. I don't know how much you're going to see it go to its fundamental value, but what I can tell you is, like in Venezuela, that first overnight revaluation, it went up 3,500%. So what might take you $100,000 today that can still buy gold and silver, versus maybe in the future it'll take 1/4 ounce of gold to pay off that same mortgage. There's a whole strategy around it, because real estate runs a couple of risks. Number one, you have to have the ability to pay that mortgage off. But why not do it with dollars that have absolutely zero value? We can still buy stuff with this. We can still buy gold. We can still buy silver. So you do whatever you're comfortable with. You have to do that regardless of what anybody says. But I am sitting on a small mortgage because I want to execute the strategy. Why pay it off with dollars that can still buy you something? Why not pay it off with dollars that have zero value, like right after they do the reset? So give us a call. We'll go over that in more detail, because surprisingly enough, we actually have a real strategy. We just don't say we have a strategy. That means that there's a method to what you buy to get in, but it also means that there's a time to exit. Having said that, you should always have that foundation of sound money in your portfolio. What will vary is the kind of sound money that you hold, the quantity that you hold, right? So for me, I've chosen not to fully pay off my mortgage because I will be fully paying it off, well, not with this, but with gold when I get that overnight revaluation. But you do whatever you're comfortable with. And Marianne, Texas asks, talk more about confiscations of our home gold and home silver. You know, they don't want pushback, and they don't want you to actually know what they're doing, particularly in this country that have indeed confiscated gold. I know I kept saying 3 times, but when I did a piece recently, 5 times in the U.S. alone. But they did not come knocking at your door. Rather, this is what I think it will look like. Let's just say that spot gold is at $5,000 when they decide to do an overt confiscation. And they will call upon your patriotic duty to turn in the gold, but they will pay you a premium for it. So they say, well, turn in your gold and we'll pay you $7,000. Well, most people believing Wall Street, I don't know why they do, but they do, will go, but wait a minute. This is only worth $5,000 and they're willing to pay me $7,000. They'll do a big, huge sweep of the IRAs because that's where most of the gold, if you're in the US, that's where most of it's held, private citizens anyway. So they'll do a big sweep and they wouldn't get a lot of pushback because people think they're getting a deal. When have you really known any government to give their citizens any kind of real deal? I don't see them knocking on the door, but I do see them making it challenging, if not impossible, to use it in the real economy. And remember, if you're executing the Zang Enterprise Sound Money strategy, you need to be using it in the marketplace because it's about holding your purchasing power intact and then, sustaining a standard of living, protecting any fiat money wealth that you've managed to accumulate, paying off any fixed rate debt that you're sitting on, and then being in a position to take advantage of opportunities that present during this crisis, as well as building a legacy to leave your children in a better position than they will be if you don't do this. So when you're looking at all of that, inflation is a form of confiscation that impacts you at the home, but they're not coming knocking on your door. Taxation is a form of confiscation. Royalties are a form of there are so many different forms of confiscation. They just name it differently so you don't realize that that's what they're doing. But isn't it time to say no more? Well, how do we do that? The global sound money movement, that's how we do that. We demand sound money, redeemable gold back in the system again. So if they do that, no more confiscation. It doesn't eliminate inflation if it's partial, and you can see that on the purchasing power charts as they were removing the gold backing over time from our currency because they need more flexible currency. Yeah. Gold is flexible in terms of price, but anything physical, there is a finite amount. So there are lots of forms of confiscations that are taking place and have taken place your entire lifetime. They prefer to do it covertly so that they get your cooperation. And if they were to do an overt confiscation, the most likely outcome is that they're going to pay you a premium so that you go along with their plan. And if it's in an IRA, you're not really going to be able to say no. If you hold it outside, remember my Uncle Al, which I don't have that picture, but I needed a picture of Uncle Al for something else that I was doing. And so I went through all my photo albums, and I can't say that I found a good picture of him because I didn't. I found a decent picture of Aunt Bertie, but not a great picture of Uncle Al. However, I do have a picture of him. I don't have it on my desk today, but we'll get to that. Well, I'll show you a picture of him. But he was sitting on at least 3,000 ounces. Excuse me for a second. Is something going on?
They're just stating that the volume is a little low. Do you mind pulling your mic a little closer, just in case?
Okay. Is that? Yes, we've got Josh is not here today, and so Jessica is manning the table, and she's doing a great job, even though she's a little nervous, but she's doing a great job. Is that any better? Could you let her know? Is that any better if it's closer? Yes, no, maybe? Can you is there any way for you to make it a little bit louder on your end? It's better. Okay. So that's it on confiscations. And the fact of the matter is we want to be able to take advantage of those opportunities that present. So you got to hold your purchasing power. And Uncle Al, he had at least 3,000 ounces of gold in this form. They weren't slabbed yet, but they were in this form. And that was legal. Remember, that would have been 1964 when it was illegal to hold more than 5 ounces of gold any other way, but in collectible form. So, can you go grab the photo? Okay, I'm going to show you Uncle Al. And oh, yeah, he's most definitely real. He's most definitely. And he was very influential. You know, I mean, he still is. I mean, it's wonderful. I talk about him all the time. And here we go. Is it on the other side? Yes. Okay. Okay. I don't know how great this looks, but that's Uncle Al, and that's Aunt Bertie. And this happened to be and there he is, that's Aunt Bertie, and that's Uncle Al. And this happened to be when my daughters, that's a better picture of Aunt Bertie. I don't know if you can see it, but that's a much better picture of Aunt Bertie. It was at my daughters, I have twins, Megan and Whitney, and it was at their very first birthday party. I knew I had a picture of him. I wish it was a better picture. It's not, but there he is. And you know, I mean, he showed me how you could hold your wealth legally using it in the normal marketplace. Well, that's what the strategy is based on. Yes, there will be a black market. There's always a black market. But I want to execute my strategy. And that means that there is an exit part to the strategy. What a concept. And we've built and will continue to create the infrastructure to support this whole exit piece as well as the entry piece. And Hebrew 82:14 asks, what GSR should I trade, silver for gold? Well, again, I'm going to say it always depends. It depends on what it is that you are trying to accomplish. So call us. Talk to a strategy specialist. They can help you understand how much silver do I need, how much gold do I need, what kind of the mix do I need, because it isn't a one size fits all. I mean, basically, the strategy is exactly the same as the one that I am executing, but you might have different goals than me. I know leaving a legacy for my children and my grandchildren and down the road is really important to me. That's not necessarily so important to other people. You know, I know. So it's got to be based on you. So give us a call, have that conversation so that you get to make educated decisions. And by the way, too, if you disagree, that's okay. We're still here to support whatever it is that you want to do. We are all here to be of service. And WW3659 asks, why pay off the mortgage in the first round? Why not wait until full fundamental value is realized? Thanks. Love what you do. You're very welcome, and great question. And that is because usually by the time they do that, right, remember, if you have a 30-year mortgage, which is a huge advantage that we have here in the U.S., and maybe we'll even get a 50-year mortgage, but that's huge because it's a fixed rate mortgage. The reason why you do it in the first go around is because for most people, it's going to be extraordinarily, they will reset the mortgage. History tells us, I can't guarantee this, but history tells us that one of the things they're going to do when they can, so we have this window of opportunity, is to tie the mortgage to the evolving interest rates, which are going up and up and up and up and up, which means that your principal will be going up and up and up and up and up. And you could be in a very dire circumstance like we saw, or similar to what we saw in 2008, where, you know, you will do anything and restructure that mortgage to be able to stay in the house. I don't want you in that position. And quite honestly, If it takes a quarter of an ounce to pay off what would take 10 ounces of gold to pay off now, it's cheap. You're repaying it even with dollars that have zero fundamental value. And you're not going to be using all of your gold to do that. You're going to be using a very little amount of your gold to do that. So you will still have the ability to execute the rest of the strategy by converting into other income producing assets that are currently at nosebleed level that will be severely undervalued by the time it's time for us to convert this into that. So I just want to make sure that you are absolutely safe. And looking at everything, it gets more and more challenging as the hyperinflation continues to grow. So if you pay off your mortgage with that first, whatever it's going to be, 3,500, 1,000%, whatever it's going to be, it's going to use a very teeny weeny bit of the gold that you've actually set aside to pay off the mortgage, which means now you have more gold and more purchasing power to convert into income producing assets or use it for other purposes. And you're not running the risk of them restructuring your mortgage. That's really why. You don't want that. You don't want to be in that position. It will not be in your best interest. So that's why you want to pay that off in that first go round rather than waiting. And you're going to have plenty of gold to get to its full fundamental value anyway. And Lucky Luke 1232 says, with tokenization coming in the near future, what if I don't want to have my physical gold and silver or any of my assets tokenized? Are we going to be forced to? My guess is you will not be forced to. My guess is you will be enticed to, but it kind of goes back to that other question about why not wait to pay off the mortgage? Because if we get pushed into a box, we're not going to have any choice. I can sit here and I can tell you I will never voluntarily tokenize any of my wealth. And so if they don't want you to know what's happening, but what they'll do, how do you catch a wild hog? Well, you put food out. You entice them into this one area, and you keep doing it as they feel safer. Then you could put up a wall, a fence around them, just one side. And then you keep putting that out there. It becomes normal to them that fence is there. And after all, the food's still there. Then you can put up the next side. You'll keep feeding them. So they'll keep coming in. They'll keep coming in. You'll put up a third side. And then as they get used to that, then you put up the last one and you're trapped. So by establishing and executing the sound money strategy and also coming together in local community and creating that surety in food, water, energy security, barterability, wealth preservation, community, and shelter, and by a global community coming in and saying, no, this is our vote. We're voting with our wallets. We want sound money back in the system again. And it must be redeemable. Tokens are garbage. You cannot convert, unless they change it, you cannot convert that token into the underlying asset. What that actually will do is give banks and other corporations more collateral for leverage, which is what they do right now. They use your equity for their collateral. They reap the rewards. You suffer the consequences. Look at 2008. Nobody went to jail, right? You suffer the consequences of their behavior. You're sitting with this, and this is part of the monetary system. They can't get away with that. This whole K-shaped economy garbage, this whole income and wealth inequality is only possible because of this system where the corporations decide who in the world are the winners and the losers. And you and I, well, if we stay separate, If we don't come together in community, we're exactly the right size to fail. It happens every single time. But if we come together in community, 3% of the world buys gold and silver. 3%. Now we have enough power, I believe, to overwhelm those that are currently in power. We have to take our power back. We have to. Or the future doesn't look so great, which is why I'm looking forward to Madeline and others like her, that are the younger generations that are starting to wake up to realize the lies and want something different and want to make a difference. So, Lucky Luke, okay. So, Concerned 3302, people see precious metals as a hedge against geopolitical events. What will we do if a government simply outlaws the possession of silver and gold? Many thanks, Lynette. Well, we've seen that. That, my friends, is exactly why I personally prefer the collectible gold, because there's always a loophole. So you do whatever the guys that can write the laws or influence those that write the laws, that's what you do. If I could have the federal government's health insurance benefits, I would choose that. If it costs me a premium to what I'm paying now, I would choose that because I'm paying a lot now and I'm getting nothing for it, or virtually nothing for it. It's the same kind of thing. So by looking at the ultra rarities where 1 ounce of gold could be 15, 20, 30 million of this stuff, right? Anybody that can afford $20 million for 1 ounce of gold is not turning it in for $7,000, are they? And just like Treasury Secretary Wooten, who knew darn well that they were going to do a gold revaluation, he wrote the laws so that he got to keep, and his friends got to keep their gold. Anybody could have. All they had to say is, this is my private and personal collection. I'm a collector. But the public doesn't know that. They don't know the rules. So you just follow and do what the guys that are at the top that either write the rules or can influence those that write the rules do for themselves. And you can find that in the ultra rarities chart, which I've shown you before and will be showing you again, because I'm reasonably sure after this that we're at a breakout in this level. The ultra rarities broke out a long time ago, but in this level, which is mostly the area that we work in, I'm pretty sure that right now we're experiencing a breakout. When I know it, I will show that to you. But yeah, you have the kind of gold, right, and silver that is not likely to be outlawed, because people don't realize that gold and silver in any form is monetary at its base. It's really why you see me wear so much jewelry. And Virtual Traveler 9251 asks, hi Lynette, thank you for all you do. My pleasure, thank you. It's an honor for me to be able to do it for you. I wanted to ask why you said that 3 cents of the remaining dollar needs to be burned off. Why can't a reset happen now? Good question. And the reason is because as soon as they put gold backing, like let's say I get what I want, which is redeemable gold back in the system again, that fixes the unpayable debt where it is, and we can't pay it off. It's unpayable. So they have to hyperinflate away whatever value is left in the currency. It is really the way that advanced economies declare bankruptcy without saying we're bankrupt. But they are. I mean, what we've got are layers of zombies. Zombie governments that cannot pay the debt. And what's the definition of a zombie corporation? It is a corporation that for at least 3 years has not been able to pay the interest or all the interest on the debt that they're carrying with current earnings. Ta-da! We're there in government form. all around the world, all around the world. We're also there in many of the corporations that are zombies. They cannot pay that debt, the interest on the debt from their current earnings. So up till this point, because we're seeing a lot more bankruptcies now, but up to this point, banks not wanting that to show up on their books simply loaned the corporations more money so that they could pay that interest and take on more debt. But those days are now over. And even to the zombie consumer, which is 70% of the global economy is the consumer-driven economy, shopping, buying, but those credit cards are maxed out. And in all of these levels, we're seeing an increase in bankruptcies. But that's why it has to be burned off, because advanced economies like the US, like Europe, like Japan, they have to start into the new system with a clean balance sheet. So they have to pay off that debt. Because you might recall, if you've been watching me for a while, you know I was asking the question, what are they going to use? What are they going to use to justify this? Okay. And everything that I had read was either debt or purchases. Now with the stable coins, that question has been answered, and it's a combination of the two. So if debt is going to justify it, but they can't, that debt is not payable, we have to go back down to zero debt. So that's why I say that those, whatever is left in the currency must be burned off so that that debt gets repaid with dollars that have zero value. And that's exactly the same strategy that we utilize to pay off that mortgage. We're just doing what the government's doing. And Ernest DeBella says, please say rock and roll hoochie coo more often. I can squint and see us both at a rock and roll concert whenever you do it. Totally. Rock and roll hoochie coo. And what's funny about that, because you must be in the vicinity of my age, I mean, to me, that's just such a common saying, and that's why I use it all the time, just like, to the moon on a Lorna Doone, right? Do you remember that? I would not eat these, and they weigh really heavy. You know, I wouldn't even throw them in my pond. Yeah, even people that are not familiar with that saying, though that's amazing to me, they actually get what I mean when I say that, right, you guys? And I should take credit for it, but I didn't come up with it, as you well know. And RJ Gesk 8967 says, Lynette, I am planning on going to Fun FUN Coin Show Orlando in a few weeks. Do you recommend buying coins from vendors at big shows like that? Interested in Liberty heads in low min state and high AU grades. I mean, yeah, I'm sure that there are a lot of people that are very, very legit. So you could certainly do that. But if you can get a list of the vendors, it would not be a horrible idea to just kind of make sure that you know who it is that you want to work with to do that. I would say the only challenge, you want to make sure that they're legit. That's all. And you can probably get a list of the vendors before you go so that you can actually target who it is that you might want to work with there. And Aragon and AU, by the way, for those that are listening, is almost uncirculated. AU, almost uncirculated. And Aragon 7233 asks, with the divergence between the Eastern and Western metals prices, I mean the Shanghai Gold Exchange was showing $8 premiums above what we were showing here, Western versus Eastern. Why wouldn't you buy them in the Western exchange and sell it on the Eastern exchanges? That's the arbitration, and there probably are people that do that. I am not really familiar with the structure to actually create that arbitration here. That could be something that would be interesting to maybe look at. I'll write that down. Let me look at that. Are you going to save that for me? Okay. Jessica's going to save that for me. I'll take a quick look and see if you can even pull arbitration between the Shanghai and the CME. I'll look and see if that's possible. And Capri MD1, would you buy AUAG as Eagles and pre-33 AU coins with excess fiat currency? Yes, I would definitely. Silver, I'm just not, maybe that's foolish, but I'm just not as concerned around a confiscation because it gets used up. I mean, we can account for almost all the gold that's ever been in existence in any form, whereas with silver, it's more challenging. It isn't that they couldn't, but I mean, gold and silver are used quite heavily, silver and copper even more, in all of the build outs of these energy facilities for AI. So I'm just not as concerned with a silver confiscation as I am with the gold confiscation. The gold confiscation is before that overnight revaluation because that's what they do it against. You definitely want to buy it with excess fiat currency, although there is a certain level of that you probably want to take out of the system before they embed chips in there. I don't know whether or not they've done that yet, but then that'd be cash in the wild and would hold its value a bit better. But just for a certain amount. So yes, you need some level of fiat. Call us. Let's help you figure out what you need. And absolutely 100%, keep stacking, keep buying, keep accumulating. Personally, I prefer to do it in a more focused way. That's why I like a plan, because anything without that, frankly, is just hopium. That's all it is. And hopium is not a very good plan. And I can tell you, my babies were so cute when they were little. My goodness. Now they're 44, but back then. You don't have a tag? What does that mean? Oh, who sent it in? Oh, okay. So we don't know who sent this one in, but it says, hi, Lynette, got a question about trading gold eagles for numismatic pre-1933 coins. They seem to be almost even up. Good idea? Very good. That is exactly what I did. That was my choice. You know, once we hit a certain point in the trend cycle, I just didn't feel comfortable holding eagles. That hasn't always been true. That might not always be true. But where we are in the trend, I mean, do you trust them? Do you trust the Federal Reserve that is neither federal nor do they hold reserves, but rather a private corporation that issues this crap? What does it say on the top? Federal Reserve note. Do you realize that what you're working for is private corporate debt? Because that's who the Federal Reserve is. Why is that okay with you? You didn't know better before. We do now. I don't trust our government or our central bank to have our best interest at heart. And I don't care who's in office. I mean, I've been doing this a long time. It didn't matter. Through Democrats, through Republicans. Their job is to save themselves and take more and more and more power and leave us with fewer and fewer choices. I want a level playing field. That's why I want this. This, my friends, creates a level playing field, redeemable gold in the system. So yes, I think that's a very good idea. And Kathy Piscatello, 3369, says, hi, Lynette. What do you anticipate the ratio being before the big crash? And it looks like silver is outperforming gold. It is at the moment. Yes, it absolutely is. And that ratio has become more and more narrow. Just curious if you have an opinion. Thank you so much. I don't know that I necessarily have an opinion. I can go back and do a long-term study on it so you can see it and maybe formulate an opinion. So maybe you can grab that, because that wouldn't take me that long to do, quite honestly. So I could do a study on the ratios over time and then come up with an opinion on it. But what I do know 100% is that when it comes into a certain level of hyperinflation, then gold always has outperformed silver. And it's been unusual because typically, I go in and I use xe.com and do a comparison between dollars, spot silver, and spot gold in a whole bunch of different currencies. And up until recently, I would say 99.9% of the time, spot gold outperformed everything else. But as I've been doing this recently, like I've shown you, because of the rapid rise in silver, spot silver, at least for the moment, has been outperforming. And I can expand that to look at that a little bit more, but I'll give you that, even though I personally don't really care so much about the ratio. For me, it's about function. What am I trying to accomplish? What is the right tool for the job? And I do own lots of silver and lots of gold. If I had to say which I had more of, without a doubt, I wouldn't even have to think about it. It'd be a lot more gold than silver. But I have enough for 10 years for myself and both in each one of my daughters. And Bert, 3566, thoughts on copper. Well, we've been watching Dr. Copper explode. A lot of that as well is about those energy plants for AI. So my thoughts on Dr. Copper, where that is really primarily a manufacturing metal. If this is indeed an AI bubble, I would expect a pullback there as well. But the more, truthfully, the more energy farms that they need to create, they're going to need copper, they're going to need silver, they're going to need gold. And they're not going to need it in digital form, they're going to need it in physical form. And remember, silver gets used up. I don't know if copper gets used up. Probably has not been saved much, even if it's, no, it's not indestructible. So yeah, it gets used up. So if you want copper, rock and roll hoochie coo. It's not horrible. And also remember, any pennies that were minted prior to 1982 are 95% copper. So you could actually go to the bank and get a whole bunch of rolls and see what you find. Sit at the sofa at night. If you're watching a little TV, go through them. You might be able to find a lot of copper in those penny rolls. And Metal Market Minute asks, any idea when the overnight revaluation will happen? I can remember when Nixon came on TV in November 1971 with the news that our government was doing a good deed to take us off the gold standard. I remember that too. It really, I pay so much attention to the confidence and that loss of confidence that I feel like I might have a better indication once we break below that confidence level. Because in my opinion, I could be wrong, but probably not. Once the confidence goes to all-time lows, now the clock is really, really ticking. I wonder, that it could be quite interesting, which I don't think I've actually ever done before. But I could do it, especially in those countries that I've been following for many, many years, because I have so much data on them. to see if there is some kind of time frame between a certain occurrence, it would be that confidence piece, and when we go into hyperinflation, and from that hyperinflation to when we go into that overnight reset. Are you typing that out? Yes. Okay. Jessica does such a great job. So that could be an interesting study. I'll do that one. I'll put it, I'm not telling you I'm going to have it next week, but I will put that in the mix because I think that would be a really important actual study to look at. And let's see if there's some consistency. I don't know the answer to that, but we'll find out. And I think that'll be interesting. So Ernie Ferguson, 6346 says, Texas bill gold and silver legal tender for everyday transactions starts mid-2026 and fully implemented start 2027. Usable at the stores. Woohoo! I don't have my thing, but we need to have that. We need to have that out here. Yep. It's happening. We can do this, people. We can get sound money back in the system again. We just need to come together to do it. That's all. And Nolan in Sync. Hi, Lynette. When do you predict revaluation to happen? There's another way that we can look. Okay. Will the revaluation take place? I don't think it'll be 26. Will it be in 2027? Oh, it is decidedly so. Now, if I had to guess, I'd say that's too soon. I think we probably have more like 3 to 5 years, probably closer to the 3 mark, but who knows? We'll find out. And if you're all in position, then I don't really worry too much about it because I'm constantly prepping. Right? So I have my food, water, energy, security, barterability, wealth preservation, community, and shelter. I have all of those things in place, but now I'm wondering, do I need more? Am I prepared enough? So that's what you see when I go to Panama or I'll go other places, and we'll kind of look at this and then we'll all decide what feels the most right for each individual. I can't tell you what to do. I can tell you what I'm doing for myself. And then you get to decide what you want to do. And Junior Sanchez family 1391 asks, I discovered all the taxes that I'll have to pay once I cash out. So the question, what do you think about a self-directed IRA? Any other ways to keep my gains from taxes? Well, they kind of got you there. And especially if you're a U.S. citizen, no matter where you go in the world, you have to pay U.S. taxes. So what I can tell you is that the strategy that we developed is developed in a full circle. So if you have to pay those taxes, we're going to be recouping them. As you use up your first line of defense, we're going to be recouping it. Any fees, any taxes, any losses, anything. We have set up the strategy so that by the time you get to the other side of it, you are in a much better position. And from any of those fees and taxes, etc., you are made whole. So I don't know, short of giving up your American citizenship, and that's what a lot of people do. And I don't know if you've watched the interview that I did with Javier in Panama just recently. He is a Venezuelan citizen. And that's what he does. He is a tax specialist in that particular area. So you have all the contact information for him anyway. But short, I'm not a tax specialist. I'm not an accountant. I'm not an attorney. So I really can't tell you other than talk to people that are experts in it. And he happens to be one of them and can help you figure out a strategy to minimize that. But if you're a U.S. citizen, no matter where you go in the world, no matter what you do, you will be paying U.S. taxes. So the strategy is designed to recoup that cost. And Joseph Ehrlich, 7438, asks, Lynette, during first reset, when gold is repriced and we pay off the mortgage, you said gold tends to drop within 6 to 9 months. When the gold price drops again, would it be a good time to buy more back in? Absolutely, but understand you're going to be doing it with a different currency. So it's not just everything drops and it's hunky-dory. You're still in a hyperinflationary environment. So if you have the ability to do it, yes, but you may or may not. That's why it's important to get that position all built out now and then be in a position to take advantage of whatever opportunities will present. And that 6 to 9 months window is why it's so important to have the appropriate, not just the exit strategy, but all the pieces in place to actually, I don't know, what a concept, execute it. I don't think anybody else has that. And I think I can say that quite clearly because I don't know anybody else that studied currency life cycles since 1987. So it isn't in terms of the same dollar. It's like, what have I got here? Is this it? Yeah. Okay. I'm going to show you something. This is Venezuela. Okay. This Venezuelan bolivar, it's 20 of them. And this was minted in 2013, a 20 bolivar note. This was after an overnight revaluation. These two are 2020, 7 years later. They didn't have huge denominations like this when they printed this one because they didn't need it, but they weren't done, and they're still not, hyperinflating away the currency. And of course, we know what's going on in Venezuela. We may be going to war with Venezuela. President Trump did the first land strike, and that ratchets that probability up quite a bit. But going back to the currencies, this is a $1 million and a $5 million bolivar, or million bolivar. These have no value. This has no value. So you just have to understand that even when the revaluation takes place, it's not going to be over yet, right? So to build your position as much as possible now is what you want to do. Get it done. And Lynna 3957 asks, why are all the news media silent about the move of gold and silver? Actually, they're not. I typically watch Bloomberg, and the reason why I like Bloomberg is because they'll give me headlines over here, and then they'll give me enough of a story down here, and then I'll listen to the talking heads over here, right? So that's why it's Bloomberg versus anything else for me, because I can get more data at the same time. But they're talking about it constantly now, how, if you're concerned about geopolitics, buy gold. If you're concerned about the markets, buy gold. Look at what silver's doing. So they've been silent, even though even the manipulated spot markets have been amongst the top performing assets for a very long time, I think at least since 2000, because that's as far as I can go back on my relative performance charts, but they never talked about it until this year. Now they're talking about it a lot, and that's actually an indication of the transition from the paper digital markets into the physical realm, because everybody's becoming more aware of gold and silver, thanks to the rapid run-up. If they can keep it controlled, they can keep it hidden. Now they can't. So I'm actually hearing them talk about it quite a bit. And Keith Peavy House asks, does retail buying or selling of metals even affect market prices, or is it only paper contracts that cause the swings? Retail buying of the physical. Well, if that were actually the case, then with the central banks really piling into gold since 2005, and you didn't really see massive upswings in it because at the same time that the physical is being bought, they sell off a whole bunch of the digital and paper to suppress the visible price. That's why it doesn't express to its fundamental value, because it is the digital market that's been giving good price discovery. That's why I'm so excited about the physical markets taking over. So it's not so much the retail public buying this, and that's good. That's a very good thing because you don't want it to negatively impact price. That's why it also depends on how much you're coming into with, because we'd have to strategize how we're putting you in it, not just what we're putting you in it, but the timing of it, because we're not going to want to artificially push the prices up, but also in the exiting of it, because we are not going to want to artificially push the prices down. This transition is in place. It's not there yet, but it is definitely in place. So yeah, it is the paper contracts, or like the ETFs, right? Which is all you own are shares in a trust. You don't own the underlying metal. And you might recall that silver had to change its prospectus so that all it has to do is mirror the garbage spot markets. It doesn't even have to build those baskets. But if you have brokers that are talking people into buying GLD or SLV or any of those gold and silver ETFs, and then they call them up and say it's time to sell, yeah, the ETF market can have an impact on the visible prices. But it's not the general retail market, and it's not this market that has that impact. So that's a plus. And we saw that in that chart that I showed you earlier. And if you want a copy of that chart, just call us. And that's the chart that I put up that has the spot. This is what happened during 2008, compared the spot price to gold stocks to the collectibles. And Colleen Allen, 3382, said, I paid off my mortgage years ago, and my concern is, will I be able to pay my property tax to the state of California? How will one be able to pay the property tax with gold? Because gold outperforms inflation, right? And actually, we just recorded this morning a video on how that does that. That is a key part of the strategy, because during the Depression in the 30s, you could have had your house paid off. If you couldn't pay your property taxes, you lost your property. For that, that's what I like the fractional gold coins for, or the foreign gold coins like Swiss francs or sovereigns or French roosters or any of those things. That's what I like them for, our property taxes. And then even down, all the different sizes. That's why I like a variety of sizes in both gold and silver. But if you have gold, you will always be able to pay your property taxes. That's what history has shown us over and over and over again. You'll be able to do it in California as well. So stay tuned for that video. I'm not sure when it's coming out yet, because we just recorded it this morning. And so now it'll go in the rotation. And that's also, by the way, why I like doing these live, because this is what's happening right at this moment. And I used to do everything live way back when. And I kind of liked it, because whatever happened. And it was great training. You can have a little more fudge room when you're recording something. But we just recorded that this morning, so stay tuned. And Thorin, but if you, stay tuned. So Thorana Kostia, 5457 asks, hi, my first time to your channel. Oh, thank you so much for joining us. I really appreciate it. What's the current status as of now for silver? Thanks. Well, the spot silver market is rebounding as of this morning, but it was just technically severely overbought. If you want me to go back through those charts so you can see it, can we do that? Give me 2 seconds, and I'm going to take us, I got to pull this over here. Oh, well, that's one of the charts that I was talking about. That's not the chart. Hold on a second. Let me get there. Okay, so if you want to know what's happening specifically with spot silver, we're going to start with this one, which are the silver contracts, and they're for a half a year. But so obviously today's the last day. This is not reflective of where we are at this moment, but it is reflective of the last half of the year. So why did you see spot silver spike? Because of all of these silver contracts. Having said that, let me see. Let's just go. This is gold, spot gold. Come on. Okay. So this is the volatility in the spot silver market. And so you can kind of see, where that light blue band goes up and down and up and down. So yesterday, this is what it did, right? That was the range, the price range on that silver contract. And it should be pretty clear going all the way back. This starts in 2020, the end or the beginning of 2021. The volatility that we saw from spot silver hitting over $80 and then closing at $72 and change, that's a huge range. We have not seen that, at least since in this graph starting in 2021. Quite unusual. A lot of profit taking. Also the CME raising the margin requirements, forcing some out of their positions, which is why you would see that big, huge dump. But here's the spot silver chart itself. And since you're new to this, you can go on stockcharts.com for free and pull this up. So since you're new to our channel, we have the links to all of my work, or a big chunk of it anyway, down in the description so you can look for yourself. Any questions come up, let us know. But also, this is just a really, since October, short term, because I wanted you to see that big, huge range. And then there's just a little red line there where it closed on that date. But this is what's important, technically. Spot silver, and it's up today. But spot silver, or at least it was before I came in here, spot silver at 72.15, which was its close, is 71.6% above the 200-day moving average, which you can't even see on this chart. It tells you what it is, but it doesn't show it because I went more narrow so you could see the fluctuations. The 200, yes. What? Okay. Oh, okay. The 200-day moving average. Okay, this is how you get it and how it works. Every day for the last 200 days, they total up where the spot silver contract closes, and then they divide it by 200, and it gives them an average. Now, that average kind of works like a rudder on a boat, right? And if the spot price is a water skier, there's only so far above or below that 200-day moving average that it can go before it comes back to that number. So that's why that's important. 10% away, either above or below, doesn't matter, 10% away is technically considered a lot. So for spot silver, even after that correction that it had yesterday, to still be almost 72% away, that is extreme. Okay. Doesn't mean that it can't stay extreme. Doesn't mean that it can't just stay inside of a range, giving that 200-day moving average a chance to catch up. Doesn't mean that it can't go back toward that 200-day moving average, okay? However, this is a very positive chart because everything is moving in an upward direction and you are getting higher and higher lows. So that's what's happening with silver at this moment, and I hope that helped. If it didn't, if you have more questions, let us know, and I'll try and answer it. That's my job, okay? So, and thank you very much for being here, because I know for everybody that's out there watching, the most valuable thing that you have is your time, and that's not something that you can get back. So if you're choosing to share that with us, I want you to know how much that's truly, 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 how much that matters. And I appreciate it a lot. And I work for you. So bring the questions. And MC Brock 86 asks, so if you have metal in an IRA vault, physical metal with serial numbers, hold till when? Okay. If you have metals in an IRA, number one, they are classified as monetary metals. You can hold them however long you want to hold them. I can't tell you what to do. You do pay taxes on them if you, when you take that distribution, not when you order the distribution, because that usually will take a few weeks. And it kind of depends, but generally speaking, a few weeks. But you will, the taxes will be based upon wherever the spot market is when they actually stick it in the mail to get to you. I used to have a SEP IRA. I don't have that anymore. I took my distribution, paid the taxes, did all of that, and converted all of it to this, which is now more private. It is in my possession, and it's where my personal level of comfort is, because I could certainly be wrong. But since in the U.S. there have been five gold confiscations in the past, I think desperate governments do desperate things, and gold is easy pickings. They've done a great job at training us away from us, because when a well-packaged web of lies has been sold gradually to the masses over generations, the truth will seem outrageous and the speaker a raving lunatic. But that does not change history. And so, 5 times, that's historic precedence to me. Maybe I'm wrong. But that's the importance of understanding the true fundamental value of anything, right? Because that's the only way you know, is this overvalued? Is it fairly valued? Is it undervalued? Should I buy it? Should I hold it? Should I liquidate it? As I showed you in that other chart, the physical markets behave a little differently than the paper markets. And you can see that the global central banks are buying gold hand over fist. So I can't tell you how long to hold it, because that is not the choice that I made. Now I'm holding my gold, but I'm holding it in a form where I feel more comfortable that it is much less likely to get confiscated. And that is outside of the IRA. And beyond the matrix 3945, what fractional gold coins bars do you recommend? Kind of depends on your level of comfort. I do really like the foreign gold coins. If you're looking at a Swiss franc, you want to go prior to 1948, because they minted a whole bunch of new stuff with the date of 1948. So you want to make sure you get the older, different size fractional coins for that. And I do particularly like the foreign gold coins for that, whether they're sovereigns or they're roosters or they're marks or they're whatever they are. But I'm also good with the old American gold coins, though the premiums on those are going to be a bit higher, likely, than on the foreign gold coins. But you want fractionals because it is easier to put 2 dimes together than to break a quarter in half. If you wanted to do new stuff, then I would say that I like the 10th ounce Gold Eagles or maybe some of the Valcambi bars, but little. Because if they do indeed do an overt confiscation of gold, then the 10th ouncers would be far enough away. The last time it was 5 ounces. A 10th ouncer is going to be very far away from the maximum amount of gold that they'll allow you to have. But personally, I'm just not a bullion person. And that's thanks to my Uncle Al and history and all of my studies. But you have to do what you're comfortable with. So if I were, that would be what I would do. Or some other things that we have in the works that I'll let you know about when I can. And Lamont 22222 asks, hi, does a pre-33 coin need to be slabbed to be considered collectible, or do I need to get my BUs slabbed? No, you do not need to get your BUs slabbed. If you read what made this non-confiscatable, it was any coin minted prior to 1933. It didn't say slabbed or unslabbed or anything like that. This one happens to be dated 1889. They cannot go back to 1889 and create these coins again. So I could be wrong, but no, your BUs are just fine. And they're fine for certain functions. I think this is just a VF. I don't even think this is a BU. And VF means very fine. BU is brilliant uncirculated. This has certainly been circulated. You see me hold it, throw it around, throw it in a pouch with the other coins. It doesn't matter the condition. So no, I think that these are considered a collectible. I can't hold these in an IRA. That's what puts it in that category, what the IRS says. I can't hold these, even these raw coins. This is my savings. If I needed cash to pay salaries for the employees, whatever, this is what I would sell first. Not this. This is for conversion into income producing assets. So no, I think you're fine. And no, you don't have to get your BUs slabbed. And Frederick Sapatiro, 5974 asks, real question. Do you think that the authority would forbid gold ownership? If we don't come together, yes, they don't want you to hold any wealth. They want all of the control. That's why it's so important on a global basis to come together and demand gold back in the system because, yeah, they don't want you to hold your wealth. They want to control every single aspect of your life. Is that okay with you? Because it's not okay with me. And I'm not worried about me. I'm old. I'm worried about my children and my grandchildren and the children that they're likely to have. That's who this fight is for the 14-year-olds out there. I want to give them a world that's worth inheriting. And what I see happening scares the crap out of me. But you can't just sit there and bury your head and say, well, I have no power. You're right. One person, there's nothing I can do. I'm just one person. But there's 8.4 billion people in this world. If 3% of them came together and bought gold and silver, just converted this garbage into sound money that's above central banks and government, we can demand our power back. So, yeah, I think they would. They did for a lot of years. So, yeah, I think they would. Absolutely. And T Mint asks, hi, Lynette, morning. It's 4 a.m. here in Singapore. Thank you for getting up at 4 a.m. and coming to visit us here. I didn't make it to Singapore last time I was in Malaysia, but I will the next time. Thank you for sharing your knowledge with us. Never regret getting my gold and silver, even though my friends were laughing at me. They're not laughing now, are they? And you know, the funny thing is not that gold and silver has just started to outperform. You go back, physical, especially gold, has been one of the best performing assets, even in the manipulated spot market. Yeah, now you're the one that's laughing, but think about this. You have their ear. Share the videos with them. Help them understand why they too need gold and silver. It is not over yet, my friends. Not by a wide margin. And Johnny Ringo 420 says, can I ask, is it a good idea to have a separate stack of silver strictly for if the gold to silver ratio goes to 40-1, for example? And what would you stack for that? I mean, stop and think about it. Once we hit the hyperinflation, then people are going to understand how little value this really has, and they're not going to want to work for it. And it's going to take a minute to work through. You need, well, you do whatever you're comfortable with. But since this is a global currency reset, I think it's going to take a minute to work through. So when I'm looking at like the silver that I own, it's for my current cost of living. That's actually a reasonably substantial amount of silver. If you are stacking it just for that ratio, when it gets there, what are you going to convert it into? Now, you can convert it into gold as long as that's available, and it will be. I'm sure it will be. But since I'm more about functionality, what am I trying to accomplish? And then I want the right tool for the job. I mean, it's not going to hurt you to stack silver. It's not going to hurt you to stack gold. And if you have a bit more silver than I might think that you need, big whoop. It doesn't really matter, right? That should be the worst problem that you have to deal with, to be honest with you. So you can do it. You just want to realize that you're not ever going to want to, well, no, I shouldn't say that. You are not at that time more than likely to want to convert it back to dollars. And oftentimes when people are looking at that silver gold ratio, they're thinking about it like a trade, and that's not the way I think about gold and silver. I think more about it as insurance and an opportunity. Especially, think about it. It takes a while for everybody to catch on. So look at what it's doing. If we have a pullback, I don't care. That's just normal technical correction. It's not a big deal to me. I just keep stacking. I don't care what happens with the spot prices. I don't care because I 100% know, number one, severely undervalued. And once you realize that this little thing right here is worth somewhere around $2,000 and it's trading at whatever, $80, $100, $200, what? It's cheap. It's a sale. It's a bargain. And I'd say the same thing about gold. So, you do what you're comfortable with. It's not going to hurt you. No matter what you do, as long as you have sound money, booty, hooty, Rudy Manooty, right? You're in good shape. And John VS6GE asks, what's going to happen to graded silver coins if the spot price go higher than the value of graded coins? It can't go higher than the value of the graded coins. The graded coins will just continue to go up as well. But understand, when you're in the graded area and in the slabbed area, that is truly a supply and demand market. And typically, this is why they will outperform. Like, this will will always outperform this because there's more of these than there are of these. And what it looks like would be something like this. Let's say there's 10 people at an auction, and on the table there's this raw gold coin, and everybody wants one. Okay, wherever the bidding opens up, that's where everybody's going to pay. So, all right, there's your spot price. Then they bring out this, and there's one. Everybody wants it, but the person that's willing to pay the most for it, they're the one that gets it. But you still had those 9 other people that wanted it and didn't get it, right? So that's why typically the slabbed coins always outperform your raw coins because of that extra additional rarity factor. And the strategy is built in layers, and there's about 6 or 7 layers to the strategy. Again, goes back to what am I trying to accomplish? That has to go first. And if you're not clear, then we'll ask you a bunch of questions and help you get clear on what is it that I am trying to accomplish. Once we know that, then we can say, well, you need, a monster box of silver eagles or whatever, or you need, this coin, what have you. So really allow what you're trying to accomplish, allow your goals to guide you. Then those are the horses. That's the engine. Rather than the tail wagging the dog, have the dog wag the tail. Your goals are the dog. So, but yes, the answer is really simple, that the slabbed coins outperform because it brings in another level of rarity that the raw coins just don't have. And there is a certain level which is also part of the strategy. So just call and talk to the strategy specialists. And JWB 4BB, why hold gold? Serious question. Doesn't silver have every benefit of gold plus many necessary industrial uses? Yes, but the reason why you hold gold is because gold is the primary currency metal against which the currencies are revalued. And so on a global basis, you can hold a lot more wealth in gold than you can in silver, and especially when you go here. So unlike real estate that is classified as immovable, I cannot put this house on my back and walk away. I can, however, put all my wealth in one itty bitty coin, stick it in my pocket, and go anywhere I want in the world. And so it is a very easy way for me to carry an awful lot of wealth in a very tiny package because this is a global market. And I'm doing some work on that as well. So stay tuned. I've got a lot of things that I'm working on in the hopper that I'm quite excited about and quite excited to share it with you. But that's really why. If I'm buying a house, quite honestly, or converting into an income producing asset, it's easier for me to do it with this than it is with this because I need a whole lot more of this to equal this. So convenience, primary currency metal, they reset the currency against it, and actually it always does outperform. And do you remember which thing that we did today that had the the spreadsheet on it? I'll show you, actually. I'll show you. See. Property. Okay. So now this is just, I just did this with the property, so for property taxes, but you'll get the gist of what I'm talking about with this. Let me just get there. Oops. I'm not. Are you touching it at the same time that? Oh, okay. Because sometimes both people are touching it. Okay. I'm ready. So when you ask me that question, this is just a little spreadsheet on the day that I happened to do it. So the 19th of December. And I took a look at purchasing power, house price inflation, state property tax collections, spot silver, and spot gold, just so we could have a level playing field. Purchasing power declined by over 88%. House price inflation went up 416%. State property tax collection went up over 2,200%. Even in this manipulated spot silver market, so this is where you're saying, yeah, it can do the same thing, that was up over 5,100%, almost 52. But spot gold during that same time period was up over 10,000%. So it's just ultimately spot gold outperforms spot silver. I can't say every time, because with the rapid rise in silver recently, that's kind of been flip-flopped a bit. But you can just carry and maintain a lot more wealth in a smaller package with gold than you can do it with silver. And I hope that kind of clarified it. You can compare it against food. You can compare it against anything you want, and you're going to see something pretty similar to that. And Keith Cox 6239 asks, is stacking junk silver a good idea at this time? 100%. Junk silver is constitutional silver. It was minted prior to 1965. Remember to, if you are a client, you get the first one for free, and then any others that you want is simply at our cost for you to share. This is our dime card. It says have a pair a dime shift, and it compares a pre-65 dime with a new dime. And okay, so we actually bought these dimes at, I don't know what they are now, but August 27th is when we bought these dimes, and each dime cost us $2.78. That happens to be on this card. I don't know where they're at right now, but I would guess probably twice that or so. Okay, but you can get those at our cost, and that enables you to hand them out to your friends. And there's also a little QR code that gets you deeper into it, because I realized we're asking people to believe in sound money that have never held sound money. If you were born after 1965, I mean, there was still some silver in the system after that. But, you know, most people, my daughters, they did not have that opportunity. So that's when we came up with dime cards and quarter cards to show the people the difference and help them understand how important it is for them to protect their purchasing power. But the answer is yes. Stacking junk silver is a very, very good idea. And Johnny Ringo 420, I'm glad I found this channel. I'm glad you found it too, Johnny. I'm glad you found it. And however we can be of service, we all work for you. That's who we work for. It's very simple. That's how I've always felt. This is what I was put on the planet to do. And Gabe Zendar 2670 asks, my favorite pieces are my 3 1920s Morgans and 3 1920s piece dollars. I paid $1 for at the bank because the teller did not know what they were, and neither did the previous owner. Ta-dum. Ta-dum. And that's why I said, anybody wants to go to the bank, get a bunch of rolls of pennies or dimes or quarters. I've had clients that's what they do. They'll go to the bank, they'll get a roll of dimes, quarters, half dollars. They'll unroll them. They'll look for pre-1965, so 64 and earlier, and then they'll roll them back up again. I don't know how easy it is to find it in rolls anymore, but I know that it was at one point. Just keep in mind, gold and silver in any form is monetary at its base. And I mean, when did I get these? I have bought these for years. I'd go to yard sales, estate sales, secondhand stores, all of that. If it's marked sterling, then it's 92.5% pure. And you can see this is not polished. It doesn't matter. It can be bent. It can be broken. It doesn't matter. If I needed to, I would not care one little bit about, boom, cutting off a piece of this. And I'll show you, because I will do a video on how you use it. That one's kind of important. So that'll be one of the newer ones, more than likely. But I have a bunch of that kind of stuff on deck that I'm working on. But yep, accumulate. Get yourself a little loop so you can see if it's not marked sterling or 925. So jewelry is more likely to have that marking of 925, which is Mexican silver. That's 92.5% pure as well. However you can accumulate it, do it. More people are aware of it, but God, I'd go to these yard sales and I'd buy this stuff for nothing. Because people go, I don't want to polish it. I'll do it. Give it to me. Yeah, I love junk silver. Love it. And Forbidden Planet 7777. Have you all seen the craziness in China of people buying all the silver they can and mortgaging their houses and taking loans? Yeah. And it's coming to a theater near you. Remember, silver and gold, the spot markets have just recently become visible. More and more people are participating. Get it done while you can. Please get it done while you can. So this is it for today. This was a great time. Happy New Year, everybody. I think 2026 is going to be incredibly interesting. I know that we are hopefully going to be in the new studio. I still can't say when. In May, it'll be 2 years that we're working on it. But if anyone has personally, thank you, that's a good one. Okay, so we've had a request. Of course, if you go to the video with Javier that was just released on Saturday, he has indeed lived through a currency reset and overnight revaluation. RPAD, he's been on our channel a number of times. We'll have him back. Javier was in Venezuela. RPAD is in Romania. But if any of you have lived through a currency revaluation, a hyperinflation, or you're living through that now, I know we have viewers in Turkey and in many other places, please, and you're willing to share your story, get a hold of us just email us at hello@LynetteZang.com, because that is one way that you can absolutely be of service to all of our viewers. And we really want to bring out more of those stories. This is not something that you just hear about. This is something that people live through. And so the more information that we have on this and the more real life experiences that we can share on this, the better position it puts all of us in. And with that, for the new people here, welcome to the community. Help us grow it. If you like this, give us a thumbs up, share, and let me know how we can be of service, and let's come together and change the world. We can do it. Redeemable gold in our monetary system. Rock and roll hoochie coo. Let's get her done. And until next we meet, please be safe out there. Bye-bye.